What is good, Tesla family? It's Ray J back with another video, and in this I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with the debt ceiling and how this may affect Tesla, what's going on with tomorrow as we have the FOMC minutes coming out, and how they may affect Tesla and the whole market moving forward. I'm also going to break down some important pieces of news that came out involving Tesla and the markets, and why this is going to be very big for tomorrow. Before I break anything down about why tomorrow is going to be a very big day and how it could affect many different tickers, from SPY to QQQ to Nvda and Tesla, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. The offer ends in just about 8 days, so check it out before they run out. With that out of the way, let's get on with the video. All right, Tesla is down about 1.64% for the day, but in my video that I released early in the morning, I told you guys to watch the 185 to 186 zone on Tesla. I told you Tesla could try to bounce off that, and that's where Tesla bounced, making its way up to about 193. But then after it sold off as the market continued to drop, Tesla held 185 quite nicely. But the question now is, will Tesla continue to hold this, or is Tesla going to see more downside? And for now, the technicals are looking weaker for Tesla alongside like SPY and many other tickers. But ultimately, as we approach the FOMC minutes, this is going to dictate how the market ends up moving. And the market could still get either a big bounce or a big rug pull, depending on what's announced and what's reported in the FOMC minutes. So I'm going to break that down in just a couple of minutes. Let me first talk about the debt ceiling, though. Now, looking at the headlines that came out today from all these mainstream news outlets, they have a tendency of being very biased. So I don't really want to pay way too much attention to them specifically. Looking specifically at the transcripts of Joe Biden and Kevin McCarthy, which means looking at the words that they said, things are looking a little bit better, at least on paper. And what does that mean? Well, in the beginning, okay, there's some good ways to look at this and bad ways. The bad way to look at this would be they were telling us that a deal should be done by Sunday, and then Monday came, and then they were saying in 1 to 2 days it should be done. Well, now we're approaching Wednesday, right? It's almost the end of the day over there for today, and there's still no deal to be done, right? It's still being delayed over and over again. And then Janet Yellen started to say some very negative things about this. She said there could be a very severe recession, things are getting harder and harder and harder, and millions of Americans will suffer because of this. She said that a debt ceiling default, if there's a default on our debt, it's going to lead to millions of Americans losing their jobs, people losing their social securities, and it's just going to get worse from there. So the recession is going to be extremely severe, and this fear is finally starting to make its way into the markets. However, looking at what McCarthy and Biden have been saying, there are some pieces of news and there are some things they said which are quite promising. McCarthy first said that there has been progress that was made, and that's the first time he said this in a while. They're making progress, and they did negotiate things about the revenue, governmental revenue, and how it's going to be used. But in terms of spending, there's not a whole ton of progress that has been made, as they're on polar opposite terms for now. Biden said that he does not agree with the Republican spending plan, but he's still trying to negotiate, and they're together just continuing to fight it out. However, I am happy that they are negotiating. They don't really have a choice, but the truth is, yes, I like the fact that McCarthy's tone has changed and he's saying that, they're making progress and they should have a deal soon. And I believe the odds favor that. However, you also have to remember that words are just words and they only mean so much relative to action. Actions speak louder than words. They can talk all they want. It does not matter. What matters is, can they get the deal done and will they get it? Historically, they will get the deal done, but it's going to take a while and they tend to do it by the last minute. But until then, there are some fears that are being incited by many mainstream outlets and this entire situation, and that is affecting the market for now. However, there are other factors that will affect the markets. I'm going to talk about those first before I break down the charts. So, tomorrow we have Nvda earnings. This is going to be very, very big for the tech sector and lots of blue chips out there, not to mention the semiconductors. very, very big. We're expecting a massive move, and this will have a ripple effect on the Nasdaq and the tech sector, of course. Also, the S&P 500 to some degree, but not as much, but it's still going to be huge nonetheless. So make sure you're ready for this after the market closes. I'm expecting a very big move, and be careful with those options because when it comes to options, the premiums are going to change like crazy after the event. You're going to see a big IV crush, which means that even if you get the direction right, you can still lose a lot of money after the earnings comes out. And that's why I would recommend just being very cautious, being very careful. And that's not financial advice, by the way. But that's not going to be the biggest thing affecting the markets for tomorrow, or at least one of the biggest things. One of the biggest things is going to also be the data coming out for tomorrow in the latest report. Now, to start us off, we have some mortgage data coming out, not too huge, some oil data coming out, once again, not too massive. But then at 11 o'clock a.m. Pacific time, which is equivalent to 2 o'clock p.m. Eastern time, we have the FOMC minutes. And that is going to be absolutely massive for the stock market. Why does this even matter? What's so big about this? Well, when you look at the Fed's website, the FOMC minutes will give us more and more insights about what was discussed during the FOMC meeting, and we're going to see more opinions about what the Fed speakers were saying. We're going to see more views by the policymakers, and we're also going to learn more about the public's interpretations of the economic and financial departments and the developments of their processes going forward. So this is all going to be very important. We're going to learn more about what the Fed is saying about interest rates. Are they going to raise rates even more? Will the Fed continue to remain more hawkish, or will the Fed slow down a bit? Is the Fed more open-minded towards a pause? Which members are thinking what? It's super, super important. The Fed is also going to talk about how they're going to use data and why on earth there are ways at which looking at data may be adjusted. So this is once again going to be pretty massive. Waller from the Fed is going to speak a few hours before this comes out, and this will cause a big move in the stock market. The market could pump off of this if a lot of Fed speakers are just not as hawkish, but if they are more hawkish, the market could also get rug pulled. So be very careful at 2 o'clock p.m. Eastern time or 11 o'clock a.m. Pacific time, wherever you are in the US or not. Be very, very careful. As far as Tesla goes, I just want to note that Tesla has been gaining lots of relative strength. The price price ratio is increasing, and we're starting to see Tesla outperform SPY, at least for the time being, based off what Tesla's beta tends to be. Tesla's a stock that has a beta of above 2.0, which means that if SPY and QQQ are up 1%, Tesla should be up over 2% or more than 2% at the very least. And now that the market was down, SPY was down almost 1%, the QQQ was down like 1.3% or 1.4%, sorry. Tesla was down like 1.5%, 1.6%. So not really that bad for Tesla. It still has some nice strength. It's holding the levels quite nicely. It came down to 185, then it started to balance, make its way up to the 190s, then it failed and ended up slowing down because the market was selling off. But overall, it held 185 quite nicely, and for now, it has more relative strength. Now, the major support on Tesla is going to be there's some support at like, well, 190 is going to be resistance, of course, but the major supports around this 186 level to 185 is where we're being held up. Then we have the 183 range followed by 180. So watch those levels very, very carefully. On top of that, from a seasonality basis, Tesla tends to be green about 49% of the time, and the strongest hours tend to be during the fourth and fifth hours of the trading day, at least according to the seasonality historical data. And then during the month of May, we're green about 54% of the time, and we tend to do better in June. But I personally think that this June may not be that great for Tesla. I think it may be a little bit different. I'm going to break down why I believe that. Finally, when it comes to something else, look at their future financial estimates. We are anticipating like a bit of a drop right here compared to before right here in terms of their EPS increase, and we are anticipating this in response to the things Elon Musk has said. And finally, the short interest did go up like crazy last week. We haven't seen this number update a bit, but it has dropped significantly because lots of shorts started to cover, and many shorts did get just very hurt by the bullish price action of Tesla as they got squeezed. Now, volume was 156 million, well above average, which is a good sign for Tesla. Tesla's holding up on high volume. We're getting lots of buying pressure, and lots of people are interested in buying the stock. Tesla did pump on high volume, but it did slow down too over time. And the short volume is continuing to go up for Tesla. So there is a little bit more shorting as well. It's not too significant because we did see it at these high levels before, and this tends to drop when it hits these high peaks like this, which could help the bulls to some degree for Tesla as well. But I'm not guaranteeing it because that's going to depend on external factors. Now, when it comes to the data for the inventory levels, the Model 3 has some good news. We're starting to see inventories drop from the 770s all the way down to just under 700. That's a very, very good sign because this was ever since Tesla announced more discounts for the Model 3. We're starting to see more people buying them up, and we're getting very close to Memorial Day. That's when we see more and more of these Teslas with high demand. So it's a good sign for Tesla. Demand is going up. Same thing is happening with the Model Y. Inventory levels were going up for the last few weeks, but now they're starting to drop again, going from about 203 all the way back down to about the 160s. So that's once again good news for Tesla. We're starting to see the models being bought up more than before. And even more good news for Tesla would be what's happening in Canada. Now, the Canadian EV market is being flooded by Chinese made cars. And that's very good to help offset some of the demand issues many people were reporting in Canada. And this is going to help them bring more and more ranges and very, very awesome things that people are interested over there. So more different models, more capabilities, more specs, and it's just what they wanted. Now, with more cars from China shipping to Canada, it's going to incentivize more people to buy them, and this will help Tesla as well moving forward. Finally, let me just add that there is some talk about Tesla's latest commercial, which is supposed to take place in Shanghai. I just want to note that, in a way, this is not their first commercial. I know people criticize Tesla for this on mainstream outlets. It's not their first commercial, nonetheless, though. Tesla has advertised in many different ways, from being able to open deals with different companies to being openly endorsed by others, and also appearing on mainstream outlets with different banners and different things that Tesla uses. They've advertised in many different ways, but this is one of the first times they've had, if not the first time, an over the air type of advertisement that is going to be paid for a particular period of time. So I consider that a good piece of news. Is worth experimenting for Tesla, and I think this could help spur up demand. I also think it could help reach bigger audiences that don't typically look at the internet, or they don't typically pay attention to Tesla related news on the internet. So it's once again a good piece of news in my eyes, no matter what these mainstream outlets try to say. So I'm going to try to keep the TA part kind of brief. I recorded this entire video, and then my entire video got deleted, so I have to re-record everything. But that's okay with me. As far as Tesla goes, what I'm seeing is, I told you guys this thing would try to base around this 185 zone, and if it failed, we could have dropped lower, but I wasn't really thinking that was likely. I was favoring more towards Tesla trying to base around here, at least just for today. But now Tesla has some relative weakness. I'm not relative weakness, just weakness in its chart itself on the PPO. We got a crossover on the MACD. It's starting to slow down. Our next major support is going to be around this 185. If that fails, then we have this 183.73. But remember, it all depends on the FOMC minutes. As far as Tesla goes, I think this thing has the potential to drop a little bit more with the market if it fails at 185 to retest the 183s, but it might try to hold within this 183 zone and try to get a bounce, right? A very, very small bounce would be very healthy. I think Tesla could try it. And then it's very likely that Tesla will react to the FOMC minutes. If the FOMC minutes cause the market to rally, because it's going to be huge for the Fed's policies and the sentiments of consumers and investors. If it causes the market to rally, Tesla can make its way back up to the higher 180s, approaching 190. If the FOMC minutes instead cause the market to crash or get a big rug pull, we're going to see Tesla make its way down to 183, then 180 flat, which happens to be where this imbalance is, right over here, this 180 area. So I believe that if Tesla fails at 183, it's going to head it all the way down to 180. And I think that it's possible for the FOMC minutes to cause it. For now, there's still lots of fear associated with this debt ceiling situation. I think it's very annoying. It's becoming obnoxious and it just keeps on going on. Eventually, they should be closing a deal, and I'm pretty confident that the odds favor them closing a deal before June 1st. After all the fear that has been incited by Janet Yellen and many other officials, after all of that, it's very likely they will close the deal. McCarthy looks very optimistic, so does Biden, and I'm really hoping they do their best jobs. It's just a matter of time. We just don't know exactly when. But like I said before, okay, the market could pull back tomorrow. That's completely fine. but we're likely going to see a huge bounce if they get the deal done temporarily. All right, a temporary bounce in the markets once the deal comes out, once the news is out, and then we're likely going to see the market sink later on as we approach June, in my opinion. Now, I'm going to break down more details about that. For SPY, we have resistance around 415 to 416, this zone right here. I'm sorry, 415 and then 417.23. Sorry about that, guys. 417. Then we have 418.5 followed by 420. Now, those are resistance levels. Support is supposed to be around this 414. If that fails, then we have 412 and 409, around the 409 area. Now, what am I seeing? This is looking pretty bearish. So the odds are favoring us maybe retesting like 412, then getting the bounce. But that will depend on some data in the morning. Then, if we are around this like 412 to 414 area, if we are somewhere here tomorrow by about 2 p.m. Eastern time, we're going to react to the FOMC minutes. If they help the market pump, we're going to make our way back to 417. If we fail, we're going to make our way down to 412, if not 409, depending on what is said by these Fed speakers, these Fed officials, and many other big entities out there. All right, so that's very important for SPY. Make sure you're open-minded and ready for anything. For the QQQ, for bullish, we're going to make our way all the way back up to 334. If we break that, there's 335.9, followed by 337, and then 340. If we're bearish, we're going to make our way down to 332, then 330. And 330 happens to be where we have another imbalance. So it does have a high probability of coming down here if it does end up failing. And then we have the 329 to 326 area. Now, I'm leaning more towards this dropping a little bit more, getting closer to like 330 and then trying to bounce. And then we're just going to react to what happens to the FOMC minutes. If we pump, like I said before, we could still pump to where this imbalance is around this 336, 337. If we fail to get the bounce, we're going to get closer to the 330 flat area. So watch that very carefully. The HYG is telling us that some bonds traders and many big institutional investors are bullish on the markets. They think that we're going to get a deal closed very, very soon for the situation, and they're still buying these dips right now. They're still continuing to buy as this thing's making a higher low, holding up nicely. And this is forming a bullish divergence, which could become bullish for the markets as well later on. Now, this doesn't guarantee anything about tomorrow, but it could play out a little bit later. For NEO, we have a big event tomorrow as they're going to be displaying their models in Shanghai. It's going to be a buy the rumor, sell the news event, in my opinion. It could try to pump approaching the event, and then it might sell off later on. But for now, it is trying to base around this zone, and we have $9 being top resistance. So watch it carefully. For the NASDAQ, I told you guys yesterday, but the NASDAQ is probably going to get closer to 12,500. We are currently at 12,560. We have a gap down around this 12,494 area, so watch that carefully. If we fill the gap, that's when we could bounce. That's very possible. There's also an imbalance a little bit lower, so I'd watch that carefully if we do break below the 50 EMA. So we could hit ourselves around the 12,450s to 12,500 zone before getting a bounce. But for now, I mean, it's holding above the 50 EMA. We're going to have to watch that first, but the odds do favor it coming down a little bit, then trying to bounce, if anything. But it's going to depend heavily on the FOMC minutes. Everything I said about SPY could apply to the SPX, or you could just do the same thing vice versa. The SPX may come down to where the 200 happens to be, around 4,127 or 4127, and then try to bounce from there. That's going to depend heavily, however, on what news comes out with the debt ceiling and with the FOMC minutes. The VIX is up 7.67%, holding up quite nicely. It has a bullish amount of momentum right here that's pretty strong, and there's not too much going on right here from the RSI. It's getting close to being overbought, so typically when that happens, it cools off a bit. There's a gap down below, so there's a chance it may come back down and the market gets a bounce. But for now, it's holding up nicely, and there's no sign of a trend change just yet. Same with the SQQQ. There's no sign of a trend change, so the market could still see a little bit more downside, but it will depend on the FOMC minutes. Tomorrow is a pretty big day for that. The dollar is up to about 103.5. If it keeps breaking out, it's going to become bearish, but we're about to get a 1 hour crossover on the MACD. So if it does end up cooling off a little bit, this could help the market eventually base. For now, we'll see what happens. But when you zoom out, the bigger picture still looks more bullish for this. That is still concerning for the markets. For Coinbase, this thing is holding up okay. I did anticipate this thing would have some downside. It still is favoring the downside. It might make its way all the way back down to about 56 before trying to bounce. For now, just be very patient on it and just see how it reacts to the big news. Apple's looking a little bit bearish too. Big crossover on the PPO, and it looks like it's trying to make its way back down to this demand zone on the 170 zone. We're at 171 right now, so it looks like it could drop a little bit more before trying to get a bounce or trying to base, and then it's going to react heavily to what happens during the FOMC minutes. Nvidia, same thing. It's looking a little bit more bearish. It might make its way to the low 300s, but I'm not too fixated on that because earnings is coming out, and it's going to make a huge move depending on how earnings goes. If earnings are good, it's going to fly all the way up pretty big into the 320 plus area if it's a very strong earnings. Many people are expecting a 6% move. That's the expected move. So 6% above this is going to be over $18 to the upside. That's pretty crazy. And if that's the case, like I said, it's going to make its way up to the 320s off good earnings. If earnings are really bad and that is true, we get a 6% move, it could come crashing down, which would be bearish for the stock market. For Google, for now, I mean, we have a bearish cross right here. It's losing momentum. But what's interesting is it is on the verge of forming a bullish divergence. It's in the process of forming it, so it might come down closer to like 120, then try to bounce. And then it's going to react heavily to what news comes out. Let me just remind you guys that if they close a deal, the market could still bounce off that news. But for now, I'm not really seeing it, so we have to be patient on that. The 10-year treasury yield is dropping a bit, it's starting to curl, and the market is dropping with it. That's once again a little bit bearish, but that's typically not how it goes. Amazon is holding up quite nicely. Got a nice push up. I was predicting Amazon would bounce, and that's what happened. But then Amazon's losing some momentum right over here. Amazon might just continue to chop around and remain within the 113 to 117 range. That's what I'm just seeing for tomorrow. Then it's going to react heavily to the FOMC minutes. Meta has a nice setup for the longer term, but it is forming a bearish divergence, so it might cool off first before it continues to push. We have this imbalance around this 241 area and might make its way down to 240 first before it tries to bounce. For now, that's what I'm seeing. So what do I see for the medium term? For the medium term, before I talk about that, let's talk about the short term. The stock market might drop a little bit for the short term off the fears about the debt ceiling, but it might get a huge bounce once the debt ceiling deal comes out, if it comes out before June 1st, and the odds heavily favor that, based off what McCarthy and Biden have been saying on their transcripts, and based off history, as the market, or at least the US, has never defaulted on its debt. So I believe that's most likely what's going to happen. Market could drop a little bit, get one more big bounce thanks to debt ceiling. Then I think it's going to turn into a buy the rumor, sell the news event. Uh, not like a perfect one in a way where we could get a pump off the news in the beginning, but then we could sell off afterwards, right? And I'm still seeing that because of the bearish divergences developing on SPY. They're still technically developing, but it's still technically valid at the same time. You can see it right here on the RSI and the PPOs of the MACD. And I'm still anticipating that there's likely going to be downside in the June period, right, for SPY and the QQQ and many other stocks. So for the medium term, I'm still favoring the bears as the market's kind of overextended, and we could get some more negative news for banks because of what's happening with these lending rates, and also because lending has been dropping like crazy in America. So it's just worth noting. Until then, though, let me just note that the market it could drop a little bit for the short term, get a nice bounce off the debt ceiling deal being closed. Then it's likely going to start downtrending as we approach June to July, in my opinion, based off these bearish divergences, which are continuing to develop. All right, guys. So thank you all so much for listening. You can see it right here. It's a little hard to see on the 1 hour time frame, but it is still valid right here. On the MACD, it's also evident like right here. So they're still valid. So please watch all of these charts very carefully and just be very patient. There's likely downside coming for the more medium term. For the short term, the market could also see some more downside before getting another bounce off the debt ceiling closure of the deal. And just be very patient and get ready for tomorrow specifically. Just for tomorrow, we have the FOMC minutes. So make sure you're ready for that. I just want to thank you all so much for listening. Finally, I have some merch for you guys if you're interested in buying anything like a cap or a hoodie or a tank top that says "to the moon" or something like that. And don't forget about the Webull link. The offer ends very soon. Deposit any amount of money and you're guaranteed up to 12 free stocks. For Tesla, don't forget about the levels I told you. Don't forget about what I predicted. And thank you all so much. I appreciate all of you. Tesla to the moon alongside the overall market. And peace out.